Hey warriors, good morning. Welcome to the D-Day of your C-Inter examination for taxation paper. I'm sure enough amount of attention and preparations have already gone through by you in the last 1.5 days to make sure that you get through this examination. This video is going to be a very quick video to discuss the theoretical topics of your examination because we have discussed this in the past. This is going to come in question number 4B and is going to carry 4 to 5 marks. So if you can complete this theoretical question very beautifully, then question number 4 is guaranteed because you know clubbing and set off very well and you can bundle that very well for your 10 marks in examination. So I'm not going to waste much time. I'm going to quickly get into the theoretical topics. We're going to discuss this very fast. This PDF will be available in the description box as well, so you can carry this on the day of your examination. Go forward, and before the examination, if you can quickly watch this and then enter the examination, you can easily complete all the questions of just 9 questions for you to prepare for your examinations. People should not take much time, so let's do this quickly. First question is the case where the previous year and assessment year are the same. You have a question in examination, people, where the question will come and tell you, are there any instances when the PY and AY can become the same? Yes, there are 5 instances where PY and AY can become the same. Case number 1 is going to be any ship of a non-resident which is entering into India. A ship of a non-resident entering into India will only be allowed to exit India after they pay the sufficient taxes. Second, any kind of individual which is leaving India with no intention of returning back. A person leaving India with no intention of coming back will be liable to pay tax before he leaves India. Third, any AOP or BOI or AJP which is formed for a particular purpose is likely to be dissolved in the same year itself. I am going to create in the same year, I'm going to dissolve in the same year, will be liable to pay advance tax before he leaves India. 4. Any person who is likely to discharge, sell or any part away with this asset with an intention to avoid tax payments in India. And 5. Any business or profession which is discontinued in the current year. If you are going to discontinue business or profession in the current year, you will be liable to pay tax in the current year itself. Case number 1. Case number 2, any kind of applicability of advance tax. Income tax says if you are going to be liable for advance tax, it's only going to happen if your advance tax liability requires you to exceed 10,000 rupees. 10,000 rupees or more a person has advance tax liability, you have to pay advance tax in the current year, except for one person, a person being a senior citizen who is not having a PGBP income. A person not having PGBP income as a senior citizen will not be liable to pay advance tax. What are the due dates of paying advance tax? The due dates of advance tax are very simple. For April, May and June, you're going to take 15th June. For July, August, September, you're going to take 15th September. For October, November, December, you're going to take 15th December. And for Jan, Feb and March, you're going to take 15th March. A person is going to be liable to pay 15th June, 15th September, 15th November, 15th December and 15th March with an advance tax liability of 15%, 45%, 75% and 100% for you. Yes, that is what the cases are. Are there any cases where you don't have to pay advance tax in all the 4 quarters? Yes, there are 4 cases where you don't have to pay advance tax in all the 4 quarters. You can pay advance tax from the quarter in which you have received the money. Case number 1 is going to be capital gains. Obviously, I did not know how much money I'm going to get from capital gains, so taxable only from the quarter in which I receive it. Any kind of casual income. Winnings is always unpredictable, so you cannot guarantee that you will be the winner of the winnings and therefore will only be taxable from when you get the winnings. Third, any kind of person having PGBP income for the first time. First time I'm going to have PGBP income, I will be liable to pay advance tax only from that quarter when I start my business. And fourth, any dividend income which I'm going to earn in the current year will be liable to pay advance tax only from that quarter when I get the dividend income. So these are the 4 instances where you will only be liable to pay advance tax in the respective quarters and will not be required from the first quarter itself. Theory question number 4, the most important one. Who should be filing a return in India? The following persons are mandatory required to file a return in India. You will have to file a return in India mandatorily if you are a company or an firm. But if you are going to be any other party, individual firms and all those people, you are only going to file an advanced, you are only going to file a return of income in India if your GTI, gross total income, ignoring chapter 6A, minus any kind of exemptions which you claimed under capital gains. So ignoring all capital gains exemption, ignoring all chapter 6A reductions, if your income crosses the basic exemption limit, the basic exemption limit of 2 lakh 50, 3 lakhs, 5 lakhs and 4 lakhs in DTR, that limit is crossed, you have to file a return of income in India. However, there are some specific cases where I have to mandatory file a return of income in India even if I have 0 income in the current year. What are the cases? The cases are if I am going to deposit more than 1 crore in current account. I am going to deposit more than 50 lakhs in savings account. I am going to go for a foreign travel incurring 2 lakh rupees. I am going to go for an electricity consumption incurring 1 lakh rupees. My business turnover has crossed 60 lakh rupees. My professional receipts has crossed 10 lakh rupees. My TDS amount is more than 50,000 in senior citizen and 25,000 in normal citizen. These parties will have to file a return of income in India. What are the cases, people? Current account pay 1 crore, savings account pay 50 lakhs, foreign travel is 2 lakhs, electricity is 1 lakh, I'm going to have business turnover of 60 lakhs. I'm going to have professional receipts of 10 lakhs. TDS is going to cross 25,000 for normal citizen and 50,000 for senior citizen. These parties have to mandatory file a return in India. Even if you have no incomes in the current year, please make sure that you file a return properly. Yes, next comes a question. Can you file a belated return if you miss the deadline? Answer is yes. If you miss the deadline of 31st July, 31st October, it doesn't matter. You can now file a return up to 31st December as well. 31st December mein whatever you file is going to be called a belated return. Any return filed after the due dates will be called a belated return with 31st December as the due date. However, if you file a belated return, there are some problems. You're going to have 5 consequences which is going to come to you. Consequence number 1. If you're going to file a belated return, whatever losses you have cannot be carried forward. You cannot carry forward the losses of the current year. Current year losses cannot be carried forward except for 2 losses, which is HP and UD. HP and UD alone can be carried forward. Any other losses will be lapsed for you. Second, you cannot claim any deduction under Chapter 6A Heading C, which is 80JJAA, 80Q, QB and 80 RRB. 2 royalties and 1 employee benefits. Those benefits cannot be claimed by you if you have not filed a return on time. And you cannot claim 10AA, which is your SEZ profits. Those things are not allowed as deduction. Third, you will be liable for an interest under rate of 1% per month or part thereof under Section 234A. So, an interest at 1% will be levied to you. Fourth, if you are going to be filing a return late, you have to also pay a late filing fee along with it. Late filing fee is 5,000 rupees when the income crosses 5 lakhs and will be 1,000 rupees if the income does not cross 5 lakhs. That is what the provisions are. And final, the most important one, people, you will be not eligible to choose ATR scheme. You will have to mandatory choose DTR scheme if you don't file a return on time, unless you confirm that you have already chosen ATR in the past years. So if you have chosen ATR in the past years, no problem. But if you have not chosen ATR in the past years, current year, you will only be choosing DTR. You cannot choose ATR because you did not file your return on time. Yes, then comes the question as to who can file revised return. People, anyone can file a revised return, whether you filed an original return, whether you filed a revised return, whether you filed a belated return. All the 3 parties are eligible to file a revised return and the due date remains the same as updated return, which means 31st December. However, please note, you cannot file a revised return against an updated return. Updated return alone will not be eligible for revised return. Everyone else can file a revised return. And that brings the important question, amendment year question. What is the time limit to file an updated return? What are the cases where you cannot file an updated return? And what are the additional taxes that you have to pay if you want to file updated return? Income taxes, my dear child, whether you filed an original return or not, it doesn't matter. You are now permitted to file an updated return for the next 4 years from the end of the assessment year. From this assessment year, you can go for another 4 years. So for your exam, for example, if it is assessment year 26-27, take another 4 years and you can file an updated return until then. But you can only file an updated return if it is going to be department centric, meaning you should have a loss converted to income. Your income should increase in the nature. In that case only you can file an updated return. If at any scenario your income is going to come down from the original return, not allowed. If your loss is going to remain a loss, not allowed. If you're expecting more refund from the department, not allowed. None of these scenarios I'll give you an updated return. Updated return can only be allowed if you're going to have an additional tax payable. Additional tax payable is a mandate for you to file an updated return. Please keep that in mind. Yes, you cannot file an updated return for 2 scenarios. Scenario number 1, when you have already filed an updated return, matlab revised return for updated concept is not allowed. And second, if any assessment proceedings have been pending or initiated on you, they have started an assessment proceeding on you, you are not allowed to file an updated return. You have to pay the penalties accordingly. The question for important examination is, what are the additional taxes to be paid? Income tax now comes and clarifies. If you are going to file an updated return, you now have to pay some additional taxes from your side. So for an example, if you tell me that the income which I had to pay tax on, the tax which I had to pay was 1 lakh rupee. Now income tax will come and tell you, my dear child, if you have to pay 1 lakh rupees of tax, along with the 1 lakh rupees, pay some additional money to me. If you are going to file an updated return within the first year, if you're going to file an updated return, I need you to pay an extra 25% to me. Matlab, if you had 1 lakh rupees due to me, now you'll pay 1 lakh 25. If you're going to file an updated return the second year, then you have to pay me 50% extra. Matlab 1 lakh 50 has to be paid. If you're going to pay me 24 to 36, third year you're going to file an updated return, I want you to pay 60%. This is amendment of current year, which means 1 lakh 60 will be requested out of you. And if you're going to file an updated return in the last 4th year, you have to pay 170%. So first year 25, second year 50, third year 60, 4th year 70 has to be paid from your side as an additional tax. Clear? Good. Last 2 questions. Question number 1, what are the consequences of not linking PAN with Aadhaar? One of the most common questions tested in exam. Income tax is, if you don't link your PAN with Aadhaar before 30th September, amended date 30th September 25, then the PAN will become inoperative. I will assume that the PAN is inoperative, matlab you don't even have a PAN number in your hand, and therefore you will not be given the following 4 benefits. Benefit number 1, no refund will be granted to you. I will not give you 1 rupee refund also. Whatever is pending to you, everything will be kept by the department. Second, no interest will be given on such refund if at all it was due also. I will not give you any refund on any interest on refund saying that you have not got the refund because of your mistake. No interest will be given to you. Third, TDS will be increased to a higher rate of 206 AA, which is nothing but the 20%. So you will now be liable for 20% TDS on every kind of transaction, and TCS will now go jump to 5% because your PAN has become inoperative. Yes, so these are the consequences which will follow because you did not link your PAN with Aadhaar. Now the amendment of current year comes and clarifies none of these consequences will apply if you can promise that you will link your PAN with Aadhaar in the next 2 months. So notice the provisions come and say any person will not be liable for these kind of remits if their PAN is made operative within 2 months from the end of the month in which the amount is paid or credited, which means in the next 2 months, if you're going to link your PAN with Aadhaar, I will not follow these consequences to you. You are still safe. Yes, that brings me to the final question. The final question says, what are the cases where you have to link your PAN with Aadhaar? How do you link your PAN with Aadhaar? What are the things you have to do? And what are the instances where linking is not required? Income taxes, if you want to link your PAN with Aadhaar, the only thing you need to do is pay some late fee to me. The late fee payment is going to be 1000 rupees. Pay a 1000 rupees late fee, go to the income tax portal, link your PAN with Aadhaar, matter will get closed. You will get the PAN within 30 days as operative. So within 30 days, you're going to make your PAN operative if you make the 1000 rupees ka payment. However, income tax says for the following 4 persons, you don't need to link your PAN with Aadhaar because Aadhaar itself is not required for them. Case number 1, any person residing in Assam, any person residing in Jammu and Kashmir, and any person residing in Meghalaya. These people have been confirmed to not require an Aadhaar number itself, and therefore linking for them is not required. Second, any person who's a non-resident, people, if a person is anyway staying outside India, what is the point of him linking Aadhaar with PANs of India? Not relevant at all. Third, any person of an age 80 years or more at any time in the previous year will not be required to get an Aadhaar number itself. Senior citizens, super senior citizens have been exempted from Aadhaar requirements, and therefore linking for them is not required. And fourth, any person who's not a citizen of India. Aadhaar itself was released only to citizens of India, and therefore those are the parties alone who are liable for Aadhaar linking scheme. Yes, so these are your 9 questions, people. A beautiful set of 9 questions which I have completed in 10 minutes with all of you. These 9 questions can easily score you 10 marks in examination. I'm going to put this PDF in the description box. Please make sure to download the PDF. Have a quick walkthrough once from your side as well. Trust me, it will not take you more than 5 minutes because I've already started highlighting the yellows. So if you only notice the yellows also, you're done with the chapter, people. So you only have to focus on the yellow words. You should be able to complete it from your side as well. That's it from my side. Thank you so much for listening to this video. I know this is the last minute, but thank you so much for being supportive enough to this extent. I am going to wish you all the very best for your examinations in the evening. Please make sure that you go with a calm mind, a spiritual spirit, and go and blast the paper off no matter how the paper comes off. It does not matter whether the paper comes easy or tough. You should be the one coming and telling that you will get the paper done no matter what. So yes, please go with the absolute amount of confidence. Tell yourself one simple thing. If the paper was easy, it's because I prepared so well and therefore it was easy. If the paper was tough, it was tough for everyone, which means I'm going to do better than everyone else to make sure that the paper gets cleared from my end. That is the amount of confidence that I want you to have in the taxation paper. Make sure that you blast this paper off no matter what and come back with a very, very strong confidence to yourself. Yes, I'm going to be waiting very eagerly for all of your feedbacks on my WhatsApp number. So please make sure to share all your feedbacks to me, not after tomorrow. Please make sure to share these feedbacks to me after all your examinations are getting over, including group 2 examinations as well. Yes, so please do share your feedbacks with me so that I can also do a quick paper review and tell you how your presentation has been after the examination gets over. But all those are for different days. For today, please go and make sure that you do your absolute best in this examination. Clear May 26 with an absolute amount of blast and make sure that you enter the CA final as quick as possible. That's it from my side, my friends. Take care. See you. Bye bye.